in this video, we will be presenting Task B. For Task B, our group selected Barakah Offshore Petroleum Berhad as the company previously classified under PN17 due to financial distress. As a comparison company, we selected Dayang Enterprise Holdings Berhad, which is not classified under PN17 or GN3 and is listed on the main market of Bursa Malaysia. Both companies operate in the same oil and gas services industry. The financial data we use in this analysis were extracted from the annual reports of both companies for 3 consecutive years from 2022 to 2024. First, we calculated key financial ratios for both companies. These ratios were grouped into profitability, liquidity, and solvency ratios to evaluate financial performance, short-term financial position, and long-term financial structure. For profitability ratios, we calculated gross profit margin, net profit margin, and return on equity for each company over the 3-year period. The calculated results show changes in profitability levels across the years for both companies, and the detailed numerical figures for each year are presented on the poster. Next, for liquidity ratios, we computed the current ratio and quick ratio to assess each company's ability to meet short-term obligations. These ratios were calculated consistently for all 3 years, and the year-by-year results can be referred to on the poster. We also calculated solvency ratios, including debt-to-equity ratio, debt ratio, equity ratio, and interest coverage ratio to evaluate the capital structure and long-term financial risk of both companies. The detailed calculations are displayed on the poster. Second, we calculated 3 earnings management related ratios to complement the financial ratio analysis. These ratios include discretionary accrual indicators, receivable to sales ratio, and depreciation policies, which were computed for both companies from 2022 to 2024. The purpose of calculating this ratio is to observe accounting related movements over time, particularly in areas such as accrual usage, receivable behavior, and depreciation practices. The year-by-year figures for these ratios are also shown on the poster. Overall, this all focus on the calculation of financial and earnings management related ratios, while further analysis and interpretation will be discussed by the next presenter.
This is an interpretation of financial ratios. Barakah Offshore Petroleum Berhad. Profitability. Barakah's profitability is unstable. Gross profit margin fell sharply in 2023, then increased abnormally in 2024, showing inconsistent cost control. Net profit margin turned negative in 2023 before recovering in 2024, indicating weak and unreliable earnings. ROE was negative and highly volatile, showing poor returns to shareholders. Liquidity. Liquidity weakened in 2023 when the current and quick ratios fell below safe levels, creating short-term cash flow risk. Although there was some improvement in 2024, liquidity remains tight. Solvency. Barakah faces serious solvency issues. Negative equity in 2022 and 2023 indicates financial distress. Even after equity turned positive in 2024, debt levels remained very high, and the company had difficulty covering interest expenses, especially in 2023. Dayang Enterprise Holdings Berhad. Profitability. Dayang shows strong and consistent profitability growth. Gross and net profit margins improved steadily, reflecting efficient operations and good cost control. ROE also increased, indicating better shareholder returns. Liquidity. Dayang maintained strong liquidity throughout the period. Both current and quick ratios remain well above safe levels, showing a strong ability to meet short-term obligations. Now for solvency. Dayang has low financial risk. Debt levels decreased over time, and interest coverage is very high, indicating strong ability to service debt. Cross-company comparison. Overall, Dayang is financially healthy with stable performance and low risk. In contrast, Baraka shows signs of financial distress, including unstable profits, weak liquidity, and high leverage. Indicators of potential earnings management or fraud. Baraka Offshore Petroleum Berhad. Baraka shows several warning signs of possible earnings management. First, discretionary accruals fluctuate sharply over the period, suggesting possible profit smoothing during financial distress. Second, there is a sudden and unusual jump in gross profit margin in 2024, which may indicate aggressive revenue recognition or one-off accounting adjustments. Third, a sharp drop in depreciation expense, such as possible changes in depreciation policies to boost short-term profits. Finally, a weak liquidity and high debt levels increase management incentive to manipulate earnings to meet debt obligations and avoid further PN17 consequences. Now for Dayang Enterprise Holdings Berhad. Dayang shows minimal signs of earning manipulation. Accruals remain small and stable, indicating profits are supported by cash flows. Revenue recognition appears consistent as receivables remain stable. Profitability and ROE improve gradually, reflecting general operational performance. Depreciation policies are stable, showing conservative and transparent reporting.